It's your Wednesday edition of ENCA Moneyline, your money guide. Welcome to it. My name is Kim Kabadeli. Here's what you can expect for the next half hour. Vehicle sales enjoyed a bumper December, but what about the sales market for 2015? We get more on the car market. The recent matric results have shown that there are a lot of opportunities for aspiring entrepreneurs. We'll tell you how. And online gambling has struggled to kick off in South Africa. We're joined by the Casino Association of South Africa for more on the situation. All of that and more coming up on the program, but first, your top stories. Well, Eskom is once again appealing to consumers to cut back on electricity use. The power utility is warning of possible rolling blackouts tonight, just as the country gets back to normal after the festive season.
It's the same old story for Eskom. Not enough power in the grid to meet demand. The parastatal is once again warning of a new round of load shedding in the coming days.
We are expecting that from tomorrow the situation will ease slightly into the weekend. From next week, though, we expect that the grid will be slightly tighter, and that the week after that will be, from the week of the 19th, will be even tighter. So certainly, as we head towards the end of January, a growing risk of load shedding, but at the moment the grid is stable.
But it's a race against time for Eskom. It's confident that within weeks, the first unit of the new Medupi power station will soon be online. Although in the testing phase for the next few months, it will be feeding small amounts of power into the grid.
The first unit really looking at a few weeks before the process is finally wound up, and we will be connecting the boiler where the steam pipes are to the turbine, which turns to produce electricity, and that is the last step. So we are almost there, and much needed capacity obviously at Medupi.
The project has seen many missed deadlines, but Eskom is confident that this time it's for real. Hopefully by mid-year the unit will be at full throttle. Even with the extra power though, we still face the possibility of a year or more of load shedding. The news of Medupi's progress is at least providing a pinprick of light at the end of the tunnel for Eskom and consumers.
The mobile company Turf War continues. Cell C is planning to tell the Independent Communications Authority of South Africa that its business is threatened by Vodacom's proposed buying of Neotel. South Africa's largest mobile service provider is in the final stages of a 7 billion rand acquisition of the fixed line supplier. Cell C believes the deal could be detrimental to competition in the electronic communications market. MTN submitted its own concerns about the deal late last year. It believes it will give Vodacom an unfair advantage. Telkom is also opposing the deal, saying it could damage competition. Vodacom currently owns more than 50% of the local mobile market in terms of revenue. In another telecoms battle, Telkom is suing Neotel and one of its subcontractors for over 360,000 rand. The lawsuit relates to damaged underground cables in Hillcrest, west of Durban. Neotel and Risa Telecoms and Electrical are in turn blaming the Nokia Siemens network. In 2007, Neotel began installing its own infrastructure to compete with Telkom. It outsourced a lot of work to companies such as Nokia. Nokia was reportedly working in the Hillcrest area when some of Telkom's underground cables were damaged. Neotel says it's indemnified from any damages to the value of half a million rand, but Nokia says this is only for damage to Neotel property and not Telkom. The case has been adjourned. Some good news for workers in the contract cleaning sector. The minimum wage has risen to almost 17 rand per hour in metropolitan and local council areas. According to the Labour Department, the new mandatory minimum wage kicked in yesterday. The metropolitan areas include the cities of Cape Town, Ekurhuleni, Johannesburg, Tshwane and the Nelson Mandela Bay, while the councils include Mfuleni, Mirafong, Mogale City, Randfontein, Stellenbosch and Western area. The minimum wage in rural areas has increased to 15 rand 47 cents an hour. This is 1 rand 28 cents up from last year. Well, South African-made goods are flooding the Zimbabwean market. The struggling country's total import bill now stands at almost 68 billion rand. Zimbabwe has become a major importer of processed goods, vehicles and machinery. Most of the country's productivity has ground to a halt, hurting its economy. Zimbabwe's statistics office Zimstat says the trade deficit for the 11 months to November last year widened to 35 billion rand. The country's finance minister, Patrick Chinamasa, has described the commodities and goods as imported as non-essential, cheap and substandard. He's since implemented measures to curb imports. Most goods are imported from South Africa, China and Japan. December was a good month for vehicle sales. Nearly 5,000 more new units were sold last month compared to December 2013. New vehicle sales rose 10.7% with a total 51,461 units sold. The new passenger car market recorded gains of close to 10% in volume, while sales of extra heavy commercial vehicles rose by a third. Well, we unpack now the latest vehicle sales data and, of course, the year ahead for the market. I'm joined in studio by Jeff Osborne from the RMI. Jeff, thanks so much for your time this evening.
Correction, I'm from Gumtree.
From Gumtree. Oh, sorry about that. Jeff Osborne is from Gumtree, but you were with the RMI in the past. Yes. A bumper month for car sales in December.
Absolutely, and a very welcome bumper month as well. We needed it because the year hasn't been a particularly strong year. But on the base of 3 very strong year growth prior to that. So we came off a high base, but we ended the year 0.7% down on 2013.
Okay, so overall for the year, what do you think actually pulled back on people buying new cars?
Well, I think the declining value of the rand, and of course there were 2 interest rate hikes as well.
Yes.
You know, the previous strong years that we saw was against a platform of record low interest rates.
Yeah.
And a lot of other criteria as well. But, you know, the economic growth wasn't as good as it could have been. But also we saw a very strong shift towards entry-level vehicle cars.
Yes. We also, of course, last year had the 1-month strike in the steel and engineering sector. Has the sector now fully recovered from that? And do you see, you know, the manufacturing side at the very least pushing out?
Well, that of course affected exports. We lost 16,000 units in exports.
Yeah.
And to answer your question, the sector doesn't really ever recover from that. That's 16,000 units lost.
Yeah.
But I think perhaps what is more concerning is the effect that it has on levels of investor confidence. So it was unfortunate. That was around about mid-year, as you correctly say. And that also impacted quite significantly on vehicle exports.
Affordability is, of course, a big issue. You talked about the interest rate rises that we saw last year. We've started the year with an oil price that's come down. Consumers are expected to have a little bit more money in their pockets. And dealers, of course, continuing to incite with new incentive packages and trying to get people back onto the dealer room floor.
A very competitive market, and it's great for the consumer. There's 60 different brands out there and about 2,500 different derivatives. So very, very keen, very competitive. So that's good for the consumer. But of course, as you say, it's all to do with affordability. New car prices, because of the lower rand, are going to continue to rise. The fuel sales are good because that's going to contain inflation, we hope. So there should be stability where interest rates are concerned. But it's good for the used car market. And we've certainly seen, and there's no reliable statistics on this, but anecdotally we know that used car sales have grown quite strongly this year. So there could be a stronger shift towards used cars. There's great value in a used car. People would like to retain the same spec of vehicle. So they go for a vehicle that's low mileage, still has a bit of warranty and a bit of motor plan, and there's good value in it. So
and are people finding that they've got variety when it comes to places to go to get reliable used cars in this market?
Yes, there's always a shortage of highly sought after stock, and that's what the dealers are always trying to do, is to get the right stock in place. But there is definitely a growing demand for used cars.
So what do you think is going to drive car sales this year?
Well, I think it's going to be economic growth. If we can see 2 to 2.5% economic growth, that's going to impact positively on vehicle sales. And of course, if we can retain interest rates. But it's going to be a tight year. I think let's not kid ourselves, it's going to be a tight year. But the sentiment is that all things being equal, if we do have a reasonable economic year, then we could see as much as 4% growth on 2014.
All right, we'll leave it there. Thanks for your time today. Jeff Osborne is with Gumtree. Now, sales in the world's biggest car market, China, are fast losing speed, and the road ahead in 2015 is looking increasingly congested, especially for Japanese car makers.
Nissan sold 1.2 million vehicles in China last year, up only 0.5% from 2013. And sales in December were even worse. They dropped over 9% year-on-year, the sixth straight month of sales decline. Toyota sold just over 1 million vehicles in China last year, up nearly 13%, but for this year, it's aiming to increase sales at only about half the pace of 2014. Japanese car makers face twin challenges in China, a slowing economy and political tension between Beijing and Tokyo. In total, growth in China's auto market is expected to be halved in 2014 to about 7%. Sluggish sales are causing tensions between dealerships and car makers as unsold cars pile up. Some dealers complain that they're still forced to buy more from manufacturers to meet unrealistic sales goals. Last week, a Chinese association representing more than 500 Toyota dealers sent a letter to Toyota's JV in China demanding over $350 million in subsidies, as well as more realistic sales targets. German luxury brand BMW has already agreed to pay $820 million in subsidies to its Chinese dealers to compensate for overstocked showrooms. Car makers can expect rougher conditions in 2015 as they look to put more wheels on Chinese roads.
And coming up next, will South Africa ever join the online gambling phenomenon? We come to grips with why the market has been stunted. You're watching ENCA Moneyline, your money guide. Stay with us.